The past week saw Dogecoin break out of a months-long range. In mid-September 2025, Doge jumped roughly 10%, rising from about $0.205 to $0.224. On the heels of CleanCore Solutions' announcement of a $175 million Dogecoin reserve fund, that surge was directly tied to the launch of what's billed as the first institutional Dogecoin treasury. CleanCore Solutions, an NYSE-listed cleaning systems firm, disclosed a private placement raising $175 million, backed by over 80 institutional and crypto investors, explicitly to buy and hold Doge as its primary treasury reserve asset. This is a watershed development. CleanCore is now the first public company to formally peg its balance sheet to Dogecoin. The move has attracted the imprimatur of the Dogecoin Foundation and its corporate arm, the House of Doge, which together endorsed the CleanCore strategy as a way to institutionalize Doge. In short, the latest Dogecoin rally was fueled by a straight corporate adoption narrative, a playbook, closely resembling what MicroStrategy has done with Bitcoin, and it comes with real corporate dollars behind it. CleanCore's plan, by design, mirrors MicroStrategy's BTC-only model. In CleanCore's case, the plan has already drawn heavyweight backers. The funding round included Pantera Capital, GSR, FalconX, and others, alongside input from figures like Elon Musk's attorney Alex Spiro, recently named chairman in Dogecoin, Foundation Director Timothy Stebbing on CleanCore's board. The press release makes clear that the funds will go toward acquiring Doge as the core treasury asset. CleanCore even plans to explore staking-type yield on those Doge holdings. Although the company's shares plunged approximately 60% on the news, underscoring how equity markets greeted the strategy with skepticism. Within crypto circles, the narrative is overwhelmingly bullish. Proponents argue that a regulated corporation openly holding Dogecoin legitimizes it, enabling fresh institutional capital to flow in. Cointelegraph points out that this Dogecoin treasury strategy mirrors MicroStrategy's BTC-only program and Bitcoin's ETFs-driven success, implying that if the model scales, Dogecoin could see similarly large inflows from the next wave of corporate buyers. The institutional interest doesn't stop there. For example, 21 shares, the firm behind the first spot Bitcoin ETF in Europe, has launched a Dogecoin ETP that's already trading in Europe, marking a formal avenue for broader institutional investment in Doge. Meanwhile, decentralized prediction markets have run with the ETF theme. Polymarket currently assigns roughly 75 to 80% odds to a US spot Doge ETF being approved by end of 2025. As a point of comparison, this is a big jump from odds in the 30% to 40% range earlier in 2025. Taken together, these data points feed a narrative that Dogecoin is transitioning from meme coin to mainstream asset. Analysts infer that if a regulated Dogecoin ETF does emerge, it could catalyze a flood of new capital, just as we've seen with Bitcoin ETFs. In fact, Cointelegraph suggests a spot Doge ETF could be the game-changer that justifies a $1 target. By late 2025, us on the bullish institutional side, Dogecoin now has a conga line of catalysts, a publicly traded treasury buyer, foundation backing, an EU-traded ETP, and high probability of a future ETF. Technically, DOG's charts look set up for a major move too. On the weekly timeframe, Doge has been trapped in a broad, bullish Megaphone widening channel pattern for over 2 years. Within this pattern, the lows and highs have been rising, even if sometimes chaotically. Recently, Doge hit the lower trend line of that Megaphone around 15 cents in June and rebounded sharply. Analysts like BitConsensus note that DOG's rallies inside this Megaphone have historically been impulsive waves that exceed the prior impulse each time. That logic, the latest bounce could be the start of a much larger wave. Indeed, one well-followed chart analyst estimates that the next bullish leg could drive Doge toward $1.40 roughly, a plus 550% gain from current levels. Barry Chartmonkey similarly highlighted that Dogecoin has respected that Megaphone structure, with past peaks often stopping near the 3.618 Fibonacci extension of each impulse. He sees the 3.618 fib of the June 2025 rally at about $1.15. In other words, a long-term pattern projects targets on the order of $1.40 once a new impulse gets underway. Zooming into shorter timeframes, Doge currently sits in a tightening consolidation. On the daily chart, it has formed a roughly symmetric ascending triangle with resistance around the 50-day moving average. In practical terms, that resistance is roughly 22 cents, 23 cents right now. Many chartists note that a clean break above this multi-week resistance line would confirm a bullish breakout. Cointelegraph finds that a move above the triangle's upper edge, the 50-day SMA, 0.225, implies an immediate measured target near 37 cents. Approximately 70% rally from current prices. Likewise, Chart Republic's analysis sees overhead resistance at tilde $0.245, above which the next swing could be toward the mid-$0 30 south. Importantly, analysts are watching the RSI and other indicators. Coin Republic reports that DOG's RSI has just turned up toward neutral territory, and the MACD histogram is flattening, both of which often herald an impending directional move. All told, if DOGE can take out that 22 cents to 0.24 zone on strong volume, the path toward tilde $0.3738 and ultimately up to the 1 band becomes much more likely. Volume patterns support the breakout case. Recent data showed DOGE trading volumes spiked to roughly $13.5 billion in late August, among the highest levels seen in months. Such volume surges often presage big moves, suggesting significant positioning is already occurring under the hood. On-chain metrics also hint at growing interest. For example, Glassnode's data not quoted here show an uptick in new addresses accumulating DOGE through the summer. In short, the technical configuration is bullish overall. A resolved triangle breakout could clear the way for the bullish Megaphone channel to reassert itself all the way into the $1.40 target zone that many pundits have identified. That said, risks remain. First, the key resistance zone around $0.2 to $5.23 has repeatedly capped rallies in the past. Until DOGE convincingly flips that area into support, any rally attempt could hit sellers and falter. The 50-day moving average, currently near the top of that zone, is a convergence of resistance and will likely be a battleground. If DOGE gets turned away at roughly $0.2 to $5.23 again, it could easily fall back into the 20 cents 21 cents range. Worse, a failure to break out may trigger a retest of much lower support. Cointelegraph explicitly warns that missing above the triangle would open the risk of a drop into the 19 cent 16 cent zone, essentially retracing the last leg of gains. In other words, the bullish targets only materialize if the pattern resolves upward. If the pattern snaps the other way, the bears could have a clear shot down near the prior swing lows. Whale dynamics add another twist. To date, on-chain data suggests Dogecoin's large holders have been mostly dormant, neither aggressively accumulating nor dumping during the recent run. This could be seen as cautiously bullish, no big supply hitting the market, or as a warning sign that whales are waiting on the sidelines. Notably, some analytics firms report that large Doge wallets have actually been quietly de-risking over the summer. CryptoRank highlighted sentiment data, showing top whales trimmed positions since late spring, and that transactions by whales spiked in late July, then tapered off. If this de-risking trend continues, it sets up a potential flashpoint, a sudden cascade if support breaks. Indeed, technical analysis from CryptoRank notes that DOGE currently trades just above a rising trendline dating from June. And a breakdown there, with RSI already mid-40s, could unleash a rapid sell-off. In essence, silent whale selling means that the cushion of institutional or large balance accumulation is not guaranteed, making any swing downward potentially more violent. Regulatory and macro factors also temper the bullish narrative of a Dogecoin ETF is fueling optimism, but the SEC has never actually approved a meme coin ETF before. The US regulator has acknowledged having Dogecoin ETF filings on file, but it could still draw out or ultimately deny them. Any SEC dithering or rejection would likely spook the market. As one analysis bluntly notes, regulatory uncertainty looms large for Doge. If the ETF bid falls through, or is significantly delayed, Dogecoin might suffer a gut punch move. These analysts even model bearish scenarios in which Doge reverts to the 15 cents $0.18 range if selling pressure ramps up. More broadly, Doge remains a speculative memecoin. Its price is heavily sentiment-driven. A single negative headline, say, tarnished by association with a failed project or a broad crypto market crash, could reverse the entire setup. Even macro news plays a role. Dogecoin has sometimes surged ahead of anticipated Fed rate cuts or other bullish catalysts. But if macro surprises turn out differently, that could undercut momentum. Finally, there's the question of momentum sustainability. CLEANCORE'S stock implosion down approximately 60% on announcement day shows that not all investors are convinced Dogecoin belongs in a corporate treasury. If confidence in the project wavers, for example, if major names start pushing alternative meme coins, or if retail interest shifts, that could apply a steady drag. And on-chain whales or institutions sitting on large Doge balances could choose to distribute at these highs. If enough selling pressure from either smart money or retail dumps arrives, it would flatten the bullish outlook quickly. In sum, the recent swing higher has put Dogecoin at a critical inflection point. On the bullish side, the stars have aligned. A real institutional-sized treasury backing. Bullish chart patterns that project targets of 37 cents, $1.15, and even $1.40. And growing confidence in a Doge ETF with polymarket odds now seen in the 70 to 80% range. These elements, combined with a long-term uptrend channel, paint a case for a potential parabolic move if everything clicks. But an equally plausible scenario plays out in reverse. Doge is pressing up against 0.2 to $5.23 resistance, a known ceiling, and if it pulls back, quiet whales and skeptical corporate backers mean the buying pressure behind this rally could disappear if the story falters. Moreover, the pending SEC decisions keep a sword hanging over the whole thesis. In practice, this means experienced traders should watch for confirmation. A sustained break and hold above the current range would open the next bullish stage. Failure to do so could leave Doge grinding sideways or rolling over. For now, the bulls hold the initiative. Institutional news has re-energized Dogecoin and technicals are pointing upward, but the flip side is clear. Without a clean breakout, or if key supports give way, the move could disappoint. In this way, Dogecoin's fate in the coming weeks may hinge as much on macro regulatory developments and whale behavior as on its chart. In other words, the path to $1.40 is visible if all aligns. But the pitfalls of 16 cents, 19 cents are just as much on the table. In a sense, Dogecoin is offering massive opportunity on the weekly time frame, as one analyst put it. But with risk baked in on every side, investors and traders should tread carefully and weigh both scenarios. The institutional and technical positives are real, but they come entwined with equally compelling short-term risks.